So again, for me, my conclusion is that, all right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about a company called Cleanspark, stock ticker CLSK. They are a Bitcoin mining company. So we're making a push for 10,000 subscribers. So I noticed that half of the people watching my videos still are not subscribed. So we talk about Bitcoin and Bitcoin mining companies all the time on this channel. So if that's content that you're interested in, please do us a favor and subscribe to the channel and hit the notification bell. Also, if everybody would do us a big favor and smash the like button. Lastly, you'll see in the pinned comment below, there's a link to our free Discord where we mostly talk about Bitcoin and the Bitcoin miners. Okay, I want to look at Cleanspark today for two reasons. Number one, I want to review their May Bitcoin mining operations and see how they did. We'll take a look at May versus previous months and see how Cleanspark is doing operationally. Secondly, I want to take a look at Cleanspark versus a crypto winter. So on this channel, we have been talking about which companies are most likely to survive a crypto winter, which companies do I think won't survive a crypto winter. So as I'm looking at each one of these companies now with their monthly updates, I want to take a closer look and give you a deep dive into my thoughts as to whether or not they are set up to survive a crypto winter. So, you know, Bitcoin has stayed in a bear market for extended period of time past that, but a crypto winter is down 80 or 85%. That tends to last 6 months to a year at the most. So we're going to take a look at what would happen to Cleanspark if we went into a full-blown crypto winter, and we're going to see, can they come out the other end a survivor? Let's start with our May results. Okay, Bitcoin production and operations update. May monthly production was 312. So I like to look at this month versus the prior month because these are all high growth companies. So we're looking for growth from month to month. Now, the difficulty level for Bitcoin has been on the rise. And I will tell you, most of these companies have been fairly flat over the last few months. We do see some companies having month over month growth, but Cleanspark is an example of somebody who's basically flat from April to May. They mined 313 Bitcoin in April. They mined 312 Bitcoin in May. Now, May has one extra day, so their mining did go down ever so slightly, but within a margin of error. They basically were on the exact same scale in May as they were in April. Calendar year-to-date production is 1,523, so they're averaging over 300 Bitcoin a month this year. Total BTC holdings as of May 31st was 550, so that actually went up, and you'll see a headline at the top. The company's Bitcoin holdings increased by 23%. So this is a part of their strategy. They did say they would like to have more of a combination of using their Bitcoin to fund operations and trying to hodl some of their Bitcoin. So this month they did accomplish that goal. So I want to take a look at how they did that. They have currently a deployed fleet of over 25,000 latest generation Bitcoin miners with a hash rate of 2.5 exahash. So that's up from 2.4 exahash in the previous month. We'll take a look at what their future plans are and what their commitments are as a part of looking at whether or not they can survive a crypto winter. Okay, so here's an important one. The company fully funded growth and operations through the sale of 210 Bitcoin in May 2022 at an average of approximately $32,639. So that equated to approximately $6.9 million. So they were able to fund operations and growth with $6.9 million in the month of May. So that's going to be significant because I'm going to use that as a benchmark to talk about their overhead versus their crypto winter. Because as we analyze a crypto winter and who's going to survive and who's not going to survive, it's really all about cash flow. I did do a separate video describing all the core components of what a company would need to do to survive a crypto winter, so you can check that one out if you want to. But a lot of it comes down to management's decision making and cash flow, because really the only way you don't survive a crypto winter is if you run out of cash. Like any other business, when you run out of cash and you have no ability to raise cash, then you're out of options and you're done. So the first thing is, in a crypto winter, they're not going to get 32,000 for Bitcoin. In the month of May, they sold 2/3 essentially of the Bitcoin that they mined, and they got $32,000 per Bitcoin. So I don't see Bitcoin getting down under $20,000. That's my personal belief. But for the purposes of analyzing a crypto winter, we're going to assume that it gets down to $15,000 or $16,000. So that number gets cut in half. But again, they only spent 2/3 of their Bitcoin. So that number would get cut in half, but then increased by 50% if they spent all of their Bitcoin to fund operations. In other words, if they had spent 312 Bitcoin instead of 210 Bitcoin at $15,000, that would be about $4.7 million. Essentially, they would need to find a way way to break even in a crypto winter at $4.7 million. Or even if they don't break even, let's assume that they lose $2 million a month. That's $24 million if the crypto winter lasts for 1 year. So they would need to find a way to come up with $24 million of cash plus whatever obligations they may have beyond that they've committed to. So we're going to take a look at that as well. So this is kind of how I'm filling in the blanks. I'm assuming Bitcoin crashes down to 15,000. I'm assuming it stays down there for about a year. To me, that's a fair description of a crypto winter. So obviously you can plug in your own numbers. If you think it's going to be even worse than that, you can do the math and see how they would stand under scenarios that are worse than that. I don't think it's ever going to get that bad. So to me, this is beyond what I believe is a reasonable worst case scenario. But there's a lot of fear in the market, and I do see on my Discord and in the comments and on YouTube an awful lot of people that are afraid we are moving towards a crypto winter. So again, I don't think that, but we're taking a look at what would happen if we did. Okay, so if I go to their March 31st financial statements, which is their most recent financials that they just released, you'll see in note 12 to the financial statements, commitments and contingencies, the company has cancelable purchase commitments. So the first thing is the commitments I'm about to talk about are cancelable. Now, I don't think that they will cancel them. I think they'll follow through with them even in the event of a crypto winter. So I'm going to count this as cash that they need. But so let's find out what that is. So they have purchase commitments totaling $87 million to purchase miners and approximately $10.6 million related to mining operations. The company has paid approximately $73.7 million towards these commitments as of March 31st, 2022. So what that means is the remaining commitment for future payments is approximately $24 million. So the first thing they're going to have to do in a crypto winter, if they want to fund the rest of all of their purchases from an operational standpoint, even if they were to sell all their Bitcoin that they got every month, they may be anywhere from break even to losing maybe $2 million. So if they lost $2 million a month, that would be another $24 million. That's $48 million that they would have to come up with to get from one end to the other of a long crypto winter. After their March 31st financial statements, they issued this press release. CleanSpark finalizes $35 million in financing from Trinity Capital. So I want to go through this deal really quickly because to me, this one deal alone solidifies the fact that they are set up very well to survive a crypto winter. And again, if you go through my crypto winter video, you'll see the key is management decision making. So obviously nothing is a guarantee, but if you look at how this is structured, you're going to see that they should be able to weather a crypto winter with ease, in my opinion. Now, obviously it's not fun. They may be cash flow negative. They may lose money for a year or two, but the question is, can they come out the other end of the crypto winter into a bull market for Bitcoin? And obviously, if you're bearish on Bitcoin from this day forward and you think we're in a bear market forever, then this analysis is really irrelevant. You should stay out of Bitcoin and the Bitcoin miners if you think we're moving into a forever bear market. So we're not going to make that assumption. We're going to make the assumption that right now we're looking at a typical crypto winter as they've occurred since Bitcoin was created. So they were able to secure $35 million in non-dilutive financing. So in other words, no stock issued here at all. So $35 million, and they did so on a 3-year term, which is a long term for the Bitcoin miners. A lot of these Bitcoin miners are doing debt on 24 months. This is 36 months. And this is backed by 3,336 new S19J Pro miners. So they managed to raise $35 million with 3,336 miners. Remember, they're going to have about 36,000 miners by the end of the year. So 90% of their miners are unencumbered. In other words, they have no borrowings against them. So that leaves them a massive, massive amount of room. In addition to the fact that this $35 million can go towards what we calculated as maybe $48 million of cash needed to get through the crypto winter, including buying all the rest of the machines they've already purchase ordered. So here's $35 million of it already. And they've only encumbered just a little bit more than 10% of their machines. So just making one more deal like this, even if they had to collateralize 2 or 3 times as many machines based on the fact that the price of Bitcoin was down and banks were less willing to lend money, they could easily raise another $35 million. I want to go to footnote 6, property and equipment. They have just under mining machines. They have $256 million of mining machines on their balance sheet. And that doesn't count another $60 million in deposits for additional mining machines that they'll be receiving over the rest of the year. They need $48 million. They just took a $35 million loan out. The question is, can they go borrow another $30 or $40 or $50 million against what's going to be over $300 million worth of machines. So again, I think this financing agreement is ultra important because this is a proof of concept right here. They have shown that they can borrow the money. They just did finalize $35 million of borrowings here against a very small number of their machines. And let's just take a quick look at the balance sheet. They have about $42 million in current assets. That does not include the $35 million in debt that they got after this. You can see they have $276 million in equipment plus another $70 million in deposits. So that's all money that is so far not collateralized. Now, they just put $35 million against this $345 million. So that leaves 90% of this uncollateralized. So the question is, with the $41 million that they have in current assets, with the Bitcoin that they mine over the course of the next year during a crypto winter, and with their ability to borrow against about $350 million in basically brand new Bitcoin mining equipment, can they make it through a crypto winter? Let's look at their liabilities real quick. So we can see they had $22 million in current liabilities, $23 million in total liabilities. So this $35 million in debt that they got is really the first debt that they've received. So they're looking at $424 million of assets against $23 million in liabilities. So this is a very strong balance sheet. Now, you would like to see maybe more of this under current assets and more liquid, but this has been their philosophy. They spend their Bitcoin as they need it, and that has allowed them to have this zero debt, which leaves them a massive, massive cushion to get through a crypto winter. So again, for me, my conclusion is that I think it will be fairly easy, obviously painful for everybody, but I don't see them having any problem getting through a crypto winter based on their strength of balance sheet and their cost per Bitcoin and their ability to potentially borrow money. And again, their shortfall in a crypto winter looks like it won't be that big of a number. So it's all about cash flow. That's a super quick overview of my cash flow concept. Obviously, management has to make a lot of the right decisions and a lot of other things need to happen. But from an overview standpoint, I believe that CleanSpark is very well positioned to survive a crypto winter. I also believe we're not going to have a crypto winter, but that is for you to decide. So, again, I have to say none of this is financial advice. You guys can take a look and see what you think of my calculations. And if you think it's going to get worse, then you can change my assumptions and see how they do in a scenario that is worse than the one that I've laid out. But I think either which way you slice it, unless you've abandoned all hope on Bitcoin in general, it looks to me like CleanSpark is set up very well to survive a crypto winter. I'm putting them in the survive column, highly likely in my opinion. Lastly, just to take a quick look at the chart, and I don't want to run too long, so I'm just going to look at one number. So CleanSpark is up about 6%. We're in the middle of the trading day today. So CleanSpark back 2 months ago, this was on March 28th. So this was just a few days past 2 months ago. They were trading at almost $14, $13.91. So taking the opposite side of the equation, if we were to avoid a crypto winter or even have something of a relief rally that lasts just maybe a month or two, I do think there's the potential to get back to this $13 or $14 spot that they were at just 2 months ago. And that would be a 134% increase in the price of their stock. I've given you my pessimistic crypto winter scenario. I've given you my optimistic relief rally scenario. So again, none of this is financial advice. Please do your own due diligence. You can see this stock is down dramatically over the course of the last year. If we had looked on the big picture, you'll see they're down 85% from their high that they reached about 15 or 16 months ago. So like I always say with all the Bitcoin mining stocks, they are very volatile. So please know your stocks. Please do your due diligence before making any investments. If you made it this far, remember to subscribe to the channel and smash the like button. Thank you so much for watching, and we will see you in the next video.